Well, good morning, everyone. This is Jen Felton. I'm one of the regional directors here at GoldenCare. I am pleased to introduce Dennis Rinner. He is the Director of Strategic Accounts for Integrity Long-Term Care. Dennis has actually worked with American Independent Marketing and GoldenCare for over 20 years, and we're glad to have him share his insights on longevity health planning here this morning. With that, I'm going to go ahead and turn it over to Mr. Dennis Rinner.
Thanks, Jen, and thank you everyone for joining us this morning. This topic, longevity health planning, actually has a subtitle. It's Let Your Voice Be Heard, and I'm going to talk a little bit more about that as we go through our time together. So let's just jump in to where we're going today, and some of you may or may not be familiar with Integrity Marketing Group, and that GoldenCare is a part of the Integrity family. And so let me just spend just a minute or so here sharing with you some interesting aspects about integrity and the role GoldenCare plays. Of course, many of you who have been associated with GoldenCare over the years know that long-term care has been a core part of what GoldenCare has been about. And having written over $1 billion of long-term care insurance, this is tells you that we truly are the subject matter experts. Integrity overall is helping over 500,000 new clients every year, which is a pretty amazing number. But what you may not know is, in addition to long-term care, that in 2018, Integrity wrote over $280 million of Medicare supplement business and over $260 million in Medicare Advantage. In fact, during this recent AEP, wrote 100,000 new lives. Pretty amazing numbers. In addition to that, has been very, very active in the final expense market, having written over $300 million. I don't share these numbers with you really to be braggadocious, but to let you know that this theme of longevity health planning, that all of these topics really do come into play. And so Integrity has been really the leader that you can see by these numbers. And they have a guiding principle that says, do what you say you will do when you say you will do it. And this has been kind of indoctrinated across the entire corporate culture. So that's just a little bit of a background on Integrity, and GoldenCare is a big part of the Integrity family, and we're happy to have the additional bandwidth that Integrity brings. So as we start talking today about our agenda, let me just share with you a couple thoughts. Why you are here and why GoldenCare as an integrity company is here. You know, it's interesting. We're both in the problem-solving business, but often over the many years, as Jen alluded to, I've been with over 20 years associated with AIM and GoldenCare, and in my training, I've seen that sometimes agents go about this problem-solving the wrong way. They oftentimes lead by bringing up a specific product or solution too soon by name, whether it is final expense or whether it's a Medicare Advantage plan or Medicare supplement, or even the topic of long-term care. And as you know, when a consumer hears an agent say, I want to talk to you about long-term care planning, sometimes they instantly react and they have preconceived notions as to what that subject entails. They'll say things like, hey, this won't happen to me, or gosh, that's really too expensive, or, you know, I'm really not concerned about that particular issue. They've drawn this conclusion, and they have a certain defense mechanism that's already in place before you've even had the conversation. And so by using the name longevity health planning, it allows you to use a name, a term, a vocabulary the consumer may think that they know something about, but now are willing to lean in a little bit more and listen to learn more before they draw that conclusion. It allows you as the agent to take a more holistic approach, you know, broaden the scope, because you may not know where that conversation is going to lead you, and you don't want to necessarily be too topic specific at the very start. So you can avoid kind of a fragmentic, what I call a pragmatic product approach. So as you think about where you are right now and where you want to go, hopefully today this information will help get you there. I like this this thought. It says this: if the road you are on is easy, you are probably on the wrong road. I think there's a lot of truth to that, and so we want to help you to make sure you are on the right road and are taking the right approaches. Your voice does matter, and I want to share with you a little bit more later about breaking down this word voice by each letter. So with that, let's go ahead and go a little bit further here in our discussion. And this is a visual that I came across that I really think it does remind me of that, that there is no easy road, because anytime we're asked to change or to do something different, especially those of us who've been in this business for some time, we know that it requires, A, that we have to recognize the need to change, we have to be willing to change, and change does require effort. Things don't just magically happen the way that it's depicted here with the people sitting around the boardroom. So there is great opportunity in this business, and there's an opportunity for you to take advantage of this longevity health planning and to incorporate that into your practice. So I'd like to begin by talking about what I call the 3 M's of longevity. The first M is it deals with someone's mind. We know that when we're talking about planning, that things could later in life, it doesn't always have to be later in life, because we're seeing more cognitive issues developing with people who are under the age of 65 than just those who we think are aging in and are now reaching later parts of their life, and their health is changing. So we think about their mind, we think about what else could happen, and that is their mobility. That's the second M, and that we know that mobility does tend to affect people greatly later in life, and also money. So those are the 3 M's of longevity, and they do come into play when you're having that discussion. We know that the problem in terms of the long-term care concern, it's still here and it's growing. I'm going to share with you some really amazing numbers as far as where we are today in the marketplace in terms of with this particular concern. You may not be in this market, or you could be very active in the LTC arena. If you're not in this arena, but you're in, let's say, the annuity game or the life game, or you're doing more of the senior market, you know what? There's solutions for both. And it doesn't necessarily mean that you have to become a long-term care specialist. Having this conversation and presenting the opportunity to someone to engage in this conversation is something that we all should be about if we are going to be working with individuals who are going to be facing this concern of a long life and this issue of longevity. Some of us know these numbers, and you've probably seen some of these numbers, but I'll just share with you these numbers very briefly, that 1 of 4 Americans age 65 will live into their 90s. It's amazing to me that longevity has become a big focus today, that consumers are living not just a little bit longer, but a lot longer. But contrast that with the fact that they're also dying a lot slower. In fact, most people don't have the luxury of just passing away very quickly. They end up lingering. And so it's this lingering and some of the concerns that they face that we have to address. I came across this visual that I thought was really applicable to this topic of longevity health planning, that the top goal for retirement is to have enough money to last a lifetime. And when they surveyed and looked at these retirement goals, having enough money to last the lifetime, your lifetime, or the individual's lifetime, was the number 1 concern. Remaining financially independent was number 2. But interesting enough, staying and living in their own home was number 3. So we know that as it relates to this concept of longevity in achieving our goals in retirement, that we have to be able to address these when we're talking to consumers. Also, running out of money is it's a frightening prospect. 59% of Americans surveyed say they fear running out of money more than death. And we know that one of the issues of how they can run out of money is a catastrophic illness or a tragic accident that could befall them. And as a result of that, we also know that many Americans may need to begin to reevaluate their current retirement plan. That 25% have expressed that they're not confident at all, and 26% said that they're somewhat confident. So again, this is, if you were to live to 100, these were some of those that were surveyed. More than half of those surveyed, as I said, were not confident at all. So we have to address this, and we have to be prepared to have the conversation when we're talking with folks. So let's go a little further and talk more specifically about why your clients need to know about long-term care. You may not be, as I said, a long-term care expert. You may be someone who deals with this only when someone brings it up and you have to more or less solve that problem. But let's talk about this for a moment. It's really not a financial planner or an advisor's responsibility to sell or recommend insurance to every client, but it's becoming increasingly more important to make sure you're having the long-term care conversation. So I'm not talking today about, even though we're in the problem-solving business, insurance oftentimes may or may not be what we're really trying to accomplish. Hopefully we find a role for the insurance, but having the conversation is at least enabling us to be proactive with those that we are working with. And so that falls in this area of a fiduciary responsibility to talk about risk, whether it's investment risk to a portfolio or the risk of extended health care. In fact, when I think about risk, I've broken it down into various stages of life that you're going through that your client is going through. So there's a couple areas I'd like to focus on. We might talk about volatility. That is volatility with not only with their health, but it could be volatility with where their money is, which means that the second risk could be market rate risk in terms of whether or not they're dealing in a bull market or bear market. The third could be interest rate risk. What's going on today with interest rates is a topic of concern. The fourth could be withdrawal risk, that people have to start drawing down from that retirement, this income, and maybe they're going to need more income because of an unplanned event that may trigger them having to access those retirement accounts in ways that they never thought they would, not just to live on, but to deal with a health concern. And healthcare in general is probably one of the most biggest risks that we see today, and certainly there's a bigger cost today with health insurance than we've ever thought possible. But finally, the biggest risk, I think, when we're talking about having this conversation and taking responsibility, is this risk of long-term care. I believe it's the single biggest unplanned, unfunded liability that your clients will ever face. And it is really the one thing that they may not be able to come back from if they actually have an event and haven't planned ahead. I like to tell in my consumer workshops, when people bring up about long-term care and about the cost and the premium, and I often will tell the consumers in my meetings, I'll say, you know, if you can't afford the premium, then you can't afford the risk. And if you're having a challenge with the premium, imagine the bigger challenge when it comes to the concern about having to pay for this on an ongoing basis. And so fiduciary responsibility is important, and it's usually put in a position of trust that when you have a position of trust with that client, and you need to be the resource. I like to say, if it's not you, who's it going to be? Someone's going to have this conversation and bring up this topic. And if it's not you, when's it going to be? And who's it going to be? So let's go a little bit further and kind of see why this is such a big concern. I mentioned to you about sharing some of the statistics. So here are some of the hard facts. Millions today struggle every day with the challenges that they're facing with chronic diseases. Falls, physical inactivity impact the quality of life. In fact, 80% of individuals today have at least one chronic condition, and nearly 70% of Medicare beneficiaries have two or more. So we know that the inability to perform activities of daily living, loss of independence, these are the things that can impact one and impact their longevity. Multiple chronic diseases account for 2/3 of all healthcare costs and 93% of Medicare spending. This is a great visual, one that I'm certain if you would like to see this or have this, not just in a PowerPoint, we could probably make this available to you. So how committed are you to this topic of longevity health planning? Are you committed to the point where you yourself you would call yourself an owner, or would you think of yourself more as a renter? And so let me share with you my thoughts on this. As you think about this, someone who rents, and this is true not just with the topic of long-term care, but it could be true with any particular financial product. They just think it's another product that they're actually recommending or in fact pushing. Many consider, if they're renters, that long-term care is just an expense. In fact, a renter wants to ask others to pay premiums. They want to tell someone else's story. But in fact, if you were an owner, you would consider long-term care an essential core retirement planning strategy. You would consider long-term care not an expense, but really an investment. And yes, you would pay your own premiums, and you'd be able to tell your own story. I really believe that when it's all said and done, the same excuses that consumers have for not obtaining long-term care coverage are the exact same excuses that many agents have. Consumers want and expect to do business with an agent who has passion, conviction, and believes in what they are recommending. It's hard really to be convincing if you first are not convinced. I bought my first life insurance policy when I was 18 years of age. And I remember when I was starting in the business, because I got licensed at age 18, working my way through San Diego State University, and my mentor said, "You need to own this." I said, "I'm 18. Why am I owning life insurance?" He said those words, "It's hard to be convincing and tell your story if you first aren't convinced." And you know what? Those I went out and talked to as a young agent working my way through college, I was able to pull out my policy. I was able to tell them about why I made that commitment myself to buy life insurance. It's really the same with long-term care, and it's really the same with any of the financial products that we're recommending to others. Are we an owner, or are we simply a renter? As we are having this conversation, are we actually hearing what our clients and prospects are saying to us? I really believe that listening is the key. If we listen more than we talk, and we often hear in training meetings this brought up, that you got to be a better listener. Well, I think it's not just listening, but it's your ability to become what I call a better framer. A framer is someone who knows how to frame the conversation and how to ask a question a certain way so that they then, in fact, can listen. And listening is hard work because many agents are tempted to talk more and listen less. So here are a couple tips here on taking notes, repeat or paraphrase what a client has said, ask clients to clarify or elaborate on what they've said, and keep eye contact, and do not interrupt, especially when the client is maybe telling their story. And we know when it comes to long-term care, recognition of the need is really important. And oftentimes, if that client or prospect has had recognition, they've had some form of an experience, it's better to hear them relate that than it is for you to talk about either your own personal experience or third-party experience. So practice makes perfect, and remember the opportunity sometimes knocks very, very softly, and that we actually need to practice to become a good listener. So if you need a little bit more encouragement on maybe incorporating this longevity health planning into your practice, let me share with you a couple additional tips. Back to the listening before leading, I want to share with you when it comes to plan design, it doesn't really matter what solution we're talking about. Here are three key components to plan design. In my consumer workshops that I've done over the years for agencies and organizations, I often will get asked by a consumer, what is the right age that they should begin to start planning? And they think there's a magical age I'm going to tell them, like 52 or 58. And I always answer the question the same way. When I'm asked that question about current age, I always say, it's the age you are right now. Because it doesn't really matter what age you were yesterday or a year ago or what you'll be tomorrow. The planning begins right now. And long-term care is an age-based product, so we know that current age is really important. We also know that current resources, assets, and income are how you actually will pay for this particular solution, and that your current health is critical. So as you incorporate these three key components into plan design, that will help you to determine, where do I go as far as my recommendation? So to illustrate this, we've put together a suite of solutions, but I want to just reiterate that this is really purpose-driven. It's not product-driven. And so when we start talking about these suite of solutions, we have to first have an ability to pre-screen. So this form may be a little hard to read, but what we've done is we've looked at the options that we have within the suite of solutions that GoldenCare is making available to you. And this is a broad health screen that will enable you to at least ascertain where a client is without having to go too deep into each individual application. And so by using this particular health assessment form, it will enable you to know not only what their health risk is, but also you can reconfirm what type of a budget that they might be dealing with. In my experience, I really believe that it's much easier when we know the number that we're working with to back into a solution than it is to just design a solution that may be a Cadillac plan for someone that doesn't really fit their overall budget. This form can be made available to you, again, as part of you listening today to today's webinar. So back to the suite of solutions. So this just kind of gives you a quick overview. And again, by going to goldencareagent.com, you can look at any of these various product offerings that we have. And so in traditional long-term care, of course, Mutual of Omaha is the flagship. Last 5 years has been the #1 writer of traditional long-term care insurance and has been a substantial player really since 1987. But more importantly, about in the last 14 years, when we got involved with Mutual, we've really catapulted them into that #1 spot. There's hybrids. I'm just illustrating one in particular, which is the Securian. We've got a couple products there called Secure Care and Care Shield. But hybrids in general are another solution along the lines of traditional long-term care that require a little bit more underwriting than some of the other solutions. And so we have, when underwriting becomes problematic, we've been able to develop other solutions that enables you as the agent to solve this particular problem. And so those could be a short-term home health care. They could be a product that we developed some years ago called Critical Cash. These are alternatives when underwriting, or what I call door #1, the door you'd like to go through, becomes problematic because you've pre-screened for health and have determined that maybe that's not the right road to go down. And so again, along the lines of the GTO, we also have the standalone home health care with Kemper. And then there's other solutions. I just illustrated one here with Guaranteed Life, Gillico, but it could be an annuity with a doubler for a nursing home provision. There's all kinds of other solutions that could exist, all based on, again, back to the three components of a plan design: the client's current age, the resources that you're working with, and really what is their health. And in my opinion, we always can find solutions to create affordability, but what we can't change is someone's health. So beginning that process by pre-screening will help you to lead the right way and not lead too soon. Well, having the dialogue I had promised you in the opening part of our discussion, that I was going to take the word the voice, not the voice, the TV show, but the word voice, and I would break that down. And so the V represents vocalize, which means that you have to be the one that brings up and establishes this conversation. And it could be in a client review. It could be someone that you're meeting for the first time. But one of the things that you have to vocalize and determine is just really what have the clients done so far. And so I often like to begin my conversations and not necessarily begin, but in the early stages of the conversation, I like to ask a question. Something along these lines. I will say, tell me, Bob and Mary, what are you currently right now allocating from your checking or savings or IRA accounts, any of your other qualified monies, or just money in general, 401k, from your portfolio? What have you set aside in the event of an unplanned experience that you could have in this area of long-term care? And oftentimes the prospect or client will say, well, really we haven't allocated anything at this point. And I say, with all due respect, I said, really, without planning ahead, you've allocated everything that you have, because everything is on the table now. And so vocalizing and getting them to kind of surface that, hey, this is a real concern, and that we do really need to plan ahead and to think about how we're going to handle this. The options that we talk about with a prospect or a client are the options that I've just shared with you, as far as that there is a suite of solutions. And you should be listening very carefully as they tell you what their goals are, what their concerns are, what their wants are, what their desires, so that you know what options are available, and in your mind you're beginning to have the framework for how you want to lead with the right solution. Identifying that risk that we talked about is really key. That's the other part of the word voice. So now we've talked about the V, the O, and the I. And the C is that when we communicate. When I started in this business many years ago, I mentioned to you about buying my first life insurance policy, but I also had a mentor that taught me something I've never, ever forgotten. He said this. He said, Dennis, multiplying words always divide attention, which meant keep whatever it is I was sharing, keep it simple. And he says, when you multiply the options that you're going to give to someone, it will divide their interest. And so what I've learned over the years is that when we communicate, we lead with the one solution that we feel is going to be best. Multiplying words do divide attention, and multiplying the options that are in front of someone will divide interest. So the key now is, how do we execute? Well, oftentimes clients may seem reluctant to move ahead, and we need to be proactive and not reactive. And I often tell in my consumer workshops, when I'm encouraging those consumers to sit down with their advisor and to have the long-term care conversation, or in my own past experience having sold long-term care, I would say that, Bob and Mary, today I feel like if we don't go forward, I'm going to end up putting you in a position of weakness. Do you know what I mean by that? And I'll say, well, I'm not certain. What do you mean by a position of weakness? Well, what I mean is that we don't really know. We've talked about different options, and we've talked about moving forward, but you may or may not be able to qualify for what it is that we're talking about. So I'd much rather put you in a position of strength, and that is to say, let's go ahead and move forward so that you can be in a position of strength, so that when the company comes back and tells us that they've accepted you into this particular program, this particular solution, the strategy, then you are now in control. It's amazing. Something that small and that little changes the dynamics of getting people to move forward and wanting to execute, versus the expression that they oftentimes want to say to you, which is, hey, this sounds really good, but I want to think about it. So the dialogue and the dialogue that we have your voice can and does matter, and it needs to be heard. And so one of the ways that we want to help you to let your voice be heard is, as many of you know, we've had a March Madness bonus program going on. It still continues until June 30th, so take advantage of that when you write Mutual of Omaha to make a little extra dollars in addition to doing a great service for your prospects and your existing clients. So March Madness bonus until June 30th. Couple final points. I shared earlier with you about how this problem is still here and how it's continuing to grow. So let me just share with you some of the numbers. Long-term care as an industry paid out a record $10.3 billion to over 295,000 individuals. That's amazing in terms of, and it's a record number. As we go on further with a couple other things that you should know that you could communicate to those that you're having this conversation with, 1 out of 2 Americans turning 65 today can anticipate needing some form of long-term care in their lifetime. And yet 1 in 4 are going to face expenses with long-term care well over $50,000 out of pocket. So there's lots of solutions, as I talked before. Their traditional solution of the traditional long-term care is probably the most affordable because you have the ability to leverage by having the insurance company be involved from day one. Oftentimes when we look at other solutions in the hybrid space, we're asking people to step in and use their own money first before the actual insurance company gets involved. And sometimes there's additional costs associated with the hybrid solution as well. But you have to listen and determine what is best for your prospect or your client, whether it's traditional long-term care or whether it's a hybrid or whether you need to go down the road to some other alternatives because of the health, that you just need to solve the problem and find a solution. No one can predict the future, but we can't underestimate the importance of planning ahead. And once again, it centers on age, budget, and health are all very important and critical in determining what strategy is most important. Again, unintended consequences of not planning ahead could result in this client or prospect having to reallocate income. When I asked that question before, what have you currently allocated, that assumes that they've done something. In most cases, you'll find that they haven't. Although in some situations you may have found that someone did buy a long-term care policy, many years ago. Maybe they didn't buy enough, and now you need to supplement that with some other strategies. So these are important facts, and I wanted to share them with you on things that I think you need to know when you're having that longevity health planning discussion. So perhaps you've already undertaken and you're already down the road and you're doing well, but if you haven't gotten started yet, I want to share with you 4 steps to long-term care insurance success. First is work with Jen and the staff at GoldenCare, the regional directors who are so talented and so experienced that can help you to make sure that you get appointed. Complete the contracting made easy. Make sure that you've established and that your CE is as far as your 8-hour partnership. And if you need help with that, we're glad to help cover that cost of the voucher to make sure that you'll be in compliant and able to sell long-term care. Again, some products do not require that you have the 8 hours, but if we're talking about traditional long-term care for sure, you definitely need to make sure that you've taken your partnership or that you've recertified if you did take your 8 hours and that you're in compliance. Secondly, I would say we have a website, integrityltc.com/form, so really goldencareagent.com would be the best place for you to go, and many of you who are already with GoldenCare are very familiar with that particular site and our site, and can go there and get any of the product information that we've talked about today to help you to get a little bit more knowledgeable on what solutions are available. This is something we're going to do because you're on the webinar today, and that is if you haven't gotten started in long-term care and you want to become an owner, you actually want to own your own policy, Mutual makes it very easy because they offer a 5% producer discount. And also what we're going to do at GoldenCare is we're going to offer on yourself or anyone that you happen to write a first app bonus of an additional $200. Now, I just use this as an illustration purposes. Some people want to have a compensation that is more upfront versus more level over a period of time, and so I'm using this to illustrate to you how, gee, if you wrote your own policy today and your compensation was given more upfront, you would have a situation that actually you could make more than what your actual premium outlay would be. And one of the things that will help you to get started is to make sure that you have the software. So if you go to goldencareagent.com/software, you can download the Mutual of Omaha software, and it's so easy to use, and we also have tutorials on the website that will help you as well. And finally, go back to the well. Have that conversation, whether it's, oh, by the way, when you're having a conversation with someone that they're doing a review, or you say something along the lines of, hey, Bob or Mary, before I forget, I also wanted to share with you, and then you lead into the discussion on longevity health planning. Incorporate it into your conversations in your workshops and incorporate it into your one-on-ones, and I think you'll be amazed at how easy it'll be for you to have individuals that will raise their hand and say, you know what, I really need to take a look at this, and by being proactive and not reactive, and incorporating longevity health planning into your practice, you definitely will be on that road to success. I want to thank you for attending this webinar, and I'd like to turn the time back over to Jen if there's any questions for anyone who's been listening in. Jen, back to you.
Thank you so much, Dennis. That was a great webinar. Again, I want to thank you for taking some time out today to share with our agents some ways to bring back the long-term care sell into their business. And remember, GoldenCare is here to help you write more business, so give us a call. Our number is up in the top right-hand corner here. It's 800-842-7799. And again, let us help you write more business. That's what we're here to do. If you do have some questions, you will need to type those questions in, and we can hang around here, and I'll read those if anyone does have any questions. But again, I want to thank everyone for attending here, and thanks again, Dennis. It's great that you're here, and just, you know what, go out there and let your voice be heard. So I appreciate everyone for attending here today, but again, we'll hang around for a few minutes in case anyone has any questions they would like to type in for us. And sometimes I know it is hard to type in questions, so again, I just want to reiterate GoldenCare's phone number here is in the top right-hand corner. It's 800-842-7799. We do have a question that just popped in. Dennis, do you have a telephone sales script at all that would be available?
You know, I don't think I have one currently, Jen. I think in the past we may have put together, and I'd have to, you know, look back in the archives to see if I have a current one, but I'm happy to work with the agent on just, you know, framing a conversation. If they want to reach out to me, I'd be more than happy to have that conversation if it helps them. But I don't think I have anything that's been reduced to writing. Just, you know, some of the experience I've had over the years of just how to bring it up, and a lot of it depends on the situations that they're in and what they're, you know, what they're trying to how they're trying to position the conversation.
Okay.
But happy to at least, you know, if that individual wants to reach out, I'd be more than happy to find out what their business is like and see if we could, you know, give them some ideas.
Okay, that sounds good. I can relay that to the agent, your information. Another question here, what is the most effective prospecting strategy?
Well, I think the most effective prospecting strategy is to make sure that you're, you know, it depends on the market that you're in. If you're already in, for example, working, you know, life insurance or P&C, going back to the well, going back to people you already have a relationship with is certainly the easiest place to start. You know, prospecting in general depends on how it is that you're communicating your message. You know, some of our long-term care specialists, Jen, as you know today, work remotely and they communicate strictly over the phone through the internet. And so therefore the way that they're prospecting is through internet leads, or in some cases they are still getting some direct mail leads. But I would say anytime that you can go back to people that you already have some form of a relationship, or if you're looking to partner up, in some cases there may be other professionals who will allow you to be the resource in the area of this longevity health planning, because they themselves may not want to be focused on that area. They could be a financial advisor, they could be a CPA, they could be other centers of influence that you may be able to work with, and that you'd be able to position yourself. Again, when you're thinking about prospecting, you really think about either you're going to be doing what I call hard dollar marketing or soft dollar marketing. And so hard dollar marketing is when you have to reach into your pocket and spend money, such as the internet leads or direct mail, whereas soft dollar marketing is working with your existing clients or prospects that you may have had on some other financial topics, or you're working with, again, third-party professionals that enable you to be a resource.
Great, great. I'll take this one. They asked if there's a way to get a copy of the Suite of Solutions chart that you used today. Yes, we will be sending out Dennis's entire presentation here, so you'll be able to have that Suite of Solutions chart for your use. So again, you will get a copy of the entire presentation here today. I do have another question, kind of relating back to the prospecting methods. What if the client doesn't have a book of business to go back to? What would you recommend would be the best prospecting method then?
Well, this business is a business that you have to make a financial commitment, and that's hard sometimes because you're just starting out, and the idea that you're going to, having to invest money, again, that hard dollar marketing, that becomes difficult. I would say that you should also look at centers of influence. If there's friends and other individuals that you know, or know that you're now in this business, anytime you can have a conversation with someone where there is some form of a relationship that you already have established, obviously makes it very much, it makes it easier. And again, that's there's not a commitment of resources, but you're going to have to, in this business, decide if you can, put out the money and look. And as you know, Jen, with GoldenCare, we have discount programs on direct mail if individuals want to get started. But I would just caution individuals that, you have to make a commitment, because if you just spend a little bit of money and say, hey, I'm going to spend, $400 and get, for a 1,000-piece mailer, and if it doesn't pull the results that you like, oftentimes what happens is agents give up and they think, well, I'll just go to something else. And so, it does take resources if you, to get started in this business, and you have to decide the best way to deploy those resources.
Great, that was great. Well, I don't have any other questions, so once again, I do want to thank you so much, Dennis, for coming out this morning and talking to our agents. We are recording this, so we should be able to have a recording of this webinar as well. But once again, I want to thank you all for attending here this morning, and definitely give us a call here at GoldenCare. We'll help you if you have any questions in addition. So again, 800-842-7799. Once again, thank you so much for attending, and have a great rest of your day.